Hi, welcome to the video. Dated September the 6th. We're on Wednesday. In today's video we're going to look at some tips in relation to trend following big trends that can last for many weeks or longer. Now in relation to this we're going to be looking at 5 pairs. So we're going to be looking at Euro USD, GBP USD, then the USD against 3 Euro correlated currencies: PLN, Polish Zloty, SEK, Swedish krona, and NOK, Norwegian krona. We'll go to the charts in just a moment. Now we've heavily covered these pairs since the start of July. We felt the USD would go in to a big uptrend. It has. It's been a really big move to the upside. Now you may see the dollar pull back in the short term, but the dollar is going far higher on the European currencies. We'll go over the charts and explain our logic in a moment, but just before we do so, if you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video and get limited live access to our member centre. You can also follow us on Facebook, join our Facebook group of traders if you wish, and finally join our free educational mailing list. Right, let's take a look at the opportunities. Alright, just first pair GBP USD, just quickly for new viewers. When we have this massive surge up in the GBP, speculators build up their biggest position, long position I should say, since 2014, right into the double top. At the time we wanted to short, we got the short in below 131 and we still remain bearish. Okay, we've seen over 600 pips to the downside. We've got way more to go in our view. I'll draw my levels of entry, stop and target in a moment. But first of all we need to look at speculative positioning, and I'm going to use our favourite sentiment tool, the COT Net Traders Positions. Now in terms of how we use this tool, very briefly for new viewers, your commercials, red line, they're hedgers. They will only move their positions aggressively if they think prices have moved too far from fair value. They're normally right at big turning points. Okay, large speculators, they can be right about big long-term trends, but they will get badly caught out at turning points. They're mostly hedge funds, big managed money. Okay, now what you see is the big speculative position, the biggest since 2014, is here where my cursor is. Obviously we double top and we come down. This chart is from the weekend. Obviously there's been a bit more downside. What's interesting though is how they performed in the downtrend. They drop off their longs a little bit. They really remain elevated in historical terms. Then the week before last they build up almost to this extreme, and then they dropped off a little bit last week. Okay, commercials mirror them in the opposite direction. I think when the latest COT comes out on Friday, we will see some shedding of positions. But what I'm looking for now is for those speculators to actually go short. Now, in terms of why I think they're going to go short, we'll just look at why they were so bullish of the British pound despite the big decline, and why they might change their views. So what we will do, before I do my levels of entry, stop and target, just want to show you this chart. Regular viewers be familiar with it. There is the 2014 big speculative long position. It's a long-term chart. Look at the big fall. Okay, this chart obviously was when we were coming into the double top. We've only seen a little bit of downside. There's far more downside to come. Okay, right, let's go do the levels of entry, stop and target. Right, starting off with a monthly chart of GBP USD, just to show my target because you can't see it on the daily chart. Now we've just come to the 125 level. I think we could go as low as 120. It's a major level. COT Net Traders Positions point to this level hopefully being targeted. You've got 1, 2, 3, 4, 5, 6, 7 bodies there. Then you've got various tails over here that come into the level. So it's a big level. I think it will be tested. The resistance is 127. I don't think you need to have your stop behind that level. I think you can have it a little bit closer. So let's go to the daily chart. Daily chart. First of all, in terms of COT Net Traders, when we see speculators really bullish or bearish, we want to work out, is the good news in the price or is the bad news in the price. We thought the good news was obviously in the price there, and we've fallen, but the market is reluctant to change its view. It expects 2 more interest rate hikes from the Bank of England. That's discounted. If they do raise rates, it's in the price. We don't think they will. The market also expects the UK to avoid recession. It won't, in our view. Growth is weak and GDP has stagnated. It's barely in expansion. It's about to turn negative. There's an article on this. I did it a week ago on my blog. It's still valid. Check it if you wish. It's on the link beneath the video, or a link beneath this video. If the Bank of England raise interest rates, if they go up, it will simply make the downturn worse. The situation in the UK is terrible, as anyone living in the UK will tell you. On the other side of the pair, and this applies to the euro as well, the USD's got a really good yield interest rate, really robust economy, doing far better than the UK and Eurozone, and the additional advantage of attracting safe haven flows on its global reserve status. So GBP going down. Let's do our levels. All right, in terms of levels of resistance, I'm just going to draw a trajectory in, which is there. The lower highs, which give 127, the monthly level. I don't think you need to be that far back. I'm just going to draw in. First level resistance, in my view, is here. Okay, so where these bodies hold, tail goes through, we bounce, big red holds, blue goes up, reds go, this red goes through, this red follows on. Now, in terms of second level, we always like to use round numbers. So I'm going to use 126, okay? I'll get my line straight. So basically where we pushed up there, came back, really pushed off. We're now below 126 with this level here. First, that is second level resistance. You need to stop at least 30 pips back from a round number, a lot of order flow. So I'm going to say 126.30, you're at 125. You risk 130 pips to make hopefully 500, okay? Now I think what will probably happen is we'll see a little bit of a rally up towards this level, which you could come off on weakness, or if we go through the low, just go short. Hopefully we'll go to 120. It's been a really good decline and speculators still haven't changed their view. If they exit their longs on stop and go short, hopefully a lot of downsides. That's our view of GBP USD. Now let's have a look at Euro USD, COT net traders positions first. COT net traders positions in terms of the euro. Now in terms of the euro, the speculators have been generally long over the last year, commercial short. I'm not interested in trading every twist and turn. We're just looking for when they move positions aggressively, and you get that here. It shows a big step up here in speculative positioning, big step down in commercial positioning, big divergence. We top out, go to the downside. You see speculators like longs a bit, but just like with the pound, I think they will take them all out and go short and really push the euro lower. Just one more chart in terms of the COT. This is a different way of looking at it. It goes back to 2005, so it's a really long term chart. It shows speculative net positions in the euro as a percentage of the open interest. Okay, you can see euro longs remain very elevated this year. Okay, so yeah, looking for some downside. Why might the euro turn down? What do speculators believe? Okay, I put this article, link beneath the video, you can go and read it, but I think in terms of inflation, they see inflation as high in Eurozones, the ECB should raise rates. We've got plenty of charts in showing that inflationary pressure is easing and the Eurozone is heading for stagnant inflation and recession, so the ECB will hold interest rates. Okay, in terms of the market, believes the Eurozone economy will avoid a recession. There's plenty of charts here that will show you or give our views that it won't. PMI is the leading indicator. Services and manufacturing below 50, contraction. Okay, that points to negative GDP next quarter. There's more on Euro PMIs. I'll just go down to another couple of charts. You can take a look at them all at your leisure if you wish. This is Eurozone manufacturing PMIs against the money supply, and basically it's plunged. There's no lending going on in Eurozone. This will follow. Okay, these blue blocks are recession. You're going to get another blue block soon. This is private sector borrowing as well. It's collapsed. Yeah, that does not bode well for Eurozone. It's going into recession in our view, and we think the market will come round to that view. There's more charts on this page, as I've said. Just go and take a look at them. Right, let's go and draw our levels of entry, stop and target. Right, Euro USD. I'm just going to use a chart from our member centre for this one. In terms of the trend, we've been following it down since we broke 112. What I did my last video, we were still short, but this rally here above the 20-day moving average takes us out. All we'll do is sell straight back through the 20-day moving average and we fall down. We did the same in the British pound. So we're in at 108.90, stop 108.80. If you're coming in fresh, two ways of playing it. Personally, like in the British pound, I expect a bit of a rally to test 108. Just come off the level on weakness, stop behind the second level resistance and the 20-day moving average. Okay. However, if we don't and we turn down through this candle tail, 107 level, I would sell with a stop behind 108. Be 108.30 the way I see it at the moment. Now I have got 105.50 as first level support, but monthly support is where I really think we're heading, which is the power level, which is basically 700 plus pips away from where we are now. So this is a big downtrend. I'm looking for far more. It's worked out okay so far. We'll see if our good luck continues with it. But yeah, Euro limited upside, plenty of downside. Right, what we're going to do is look at our favourite Euro correlated currency against the USD first, which is going to be USD PLN. Right, we're on USD PLN. In terms of trading the minor currencies, we really like trading them. They can be much more volatile than the major currencies. Now, in terms of the euro goes down, the Polish zloty could very often go down quicker, and other euro proxies can as well. Now, in terms of this pair, we did try a couple of longs. We got our timing wrong, tried a long there, stopped out, runs on. We tried a big long there, stopped out. Then we come into monthly support, and it's heavy monthly support here. We'll go heavily long. It's one of our favourite pairs. We're on our third trade and moving nicely to the upside. I did my update this morning in the member centre. I was thinking actually that's a really nice blue. Probably have a little bit of a pullback to 415 or towards the level. Then we'll move to the upside. Okay. Now, in terms of the price action, that actually hasn't happened. You've seen the USD follow on really strongly to the upside. Now, we'll only normally look at price action twice a day. That's all you need to do when you trend follower, once in the morning. And I've actually looked at this pair just before I did my video. I'll have to do my PM update in a bit. Yeah, USD, big candle to the upside. Now, this is caused by the Central Bank of Poland cutting interest rates by 75 basis points. I was with the market view of 25 basis points. So 75 basis point cut has seen the USD surge on the PLN. However, you can still play this one from the long side. I think we're a little bit overbought in the short term. We're going to pull back below the 425 level. Yeah, maybe towards these candles here, 423. If we do, just buy back through 425. Stop behind 420, which is really good support. That will give you 4-1 to our target on the economic fundamentals. We've got another target after that, which I'll come to in a moment. So still a good risk reward trade. If we're really to pull back towards 420, I'd buy any strength off the level with a stop behind 415, which is really solid support. That'll give you a 5-to-1 risk reward trade. I just personally think you get a little bit of pullback and then up, okay? But either or you can try. Now, in terms of, sorry, I want to go back to the chart. Just want to show you this chart here because I showed it in my last video. And a lot of traders, they think in terms of pips. Pips are not relevant at all. It's to do with the volatility of the pair. Okay, so what you want to do is look at what are percentage changes in relation to your stop and target, okay, without using any leverage at all. Now, in terms, I drew this chart, we're trading back at 410. 445 is our second target on the economic fundamentals. If we get there, 11.25% with no leverage at all, okay? Really focuses you on the long term when you look at percentages, okay? Now, I've got an escalation target. Russia-Ukraine war could give an extra 12.4%. So that's basically, sorry, I can't do it. It's near enough 24% if this second target was hit. Now, in terms of what I mean by this, I did do an article on my blog, which you can check on the link beneath this video, in relation to this and the economic fundamentals. You can go and check it out. Now, this here is not high probability, but for me, it's a high possibility. Okay, so it could happen. But even if we get to 445, that would be a really great return on the upside. So yeah, really like trading the minor pairs. Now, in terms of the other two pairs I mentioned at the start of this video, USD against the Swedish krona and Norwegian krona, I'm not going to cover them in this video. I'm kind of losing my voice and feeling a bit hoarse, which some people might say is a good idea. But yeah, I'm finding it hard to speak. I don't know why. So I'm going to finish the video here. But I think in terms of long-term trend following, it's a great way to trade. Just look at price action a couple of times a day. You focus on big levels. You look at percentages. That keeps you patient. And you only need to use small positions, which means your stress levels are reduced when you trade. Most retail traders, I think, are not interested in long-term trend following, but it's the best way to trade in our view. So there you have it. That is the video for today. We hope you found it useful. In terms of, USD SEK and USD NOK, I'm going to do a weekly forecast at the weekend, so I'll cover those pairs in that video. But they've done really well to the upside as well. But in terms of the correlated pairs, this one is our favourite. Okay, so that's the video. Thank you for watching.